I'll be giving a quick overview of the state of financial inclusion globally. So, without further ado, let's start with the bad news. Michael just touched on the fact that there are 2 billion people worldwide who are financially excluded. What does that mean? It basically means they don't have access to a formal bank account or other forms of formal financial services, such as a savings account, remittance, insurance. So it's a huge number. And within that number, there are significant disparities. One disparity is by region, where you're seeing the vast number of the unbanked being in emerging and developing economies. There are disparities by gender. Women are 28% more likely. Those women who are earning less than $2 a day are 28% more likely to be financially excluded than men. We're seeing regional disparity as well, where sub-Saharan Africa and the Middle East and North Africa is actually the lowest level of financial inclusion globally. At 86% only, 86% of people in the MENA region are financially excluded. And the regions following that are sub-Saharan Africa and South Asia. It was touched on earlier that broader Muslim economies also feature in terms of the lowest levels of bankarization at around 32%. Young people also are affected disproportionately by exclusion from financial services. That young people aged 15 to 24 are a third more likely to be financially excluded than adults. So that's the bad news. So moving on, what's the good news? Since around 2010, there's been a global effort, really, to try and address this issue of the unbanked. There's been a number of multinational initiatives, including the Alliance for Financial Inclusion, the G20, who's been engaging on the global principles for financial inclusion, followed now by the global principles for digital financial inclusion, which is a set of legal and regulatory frameworks designed to help member states around the world address financial inclusion, particularly through the digital agenda. The World Bank has the Consultative Group for the Poor, which is making significant efforts in helping countries address and tackle the issue of financial inclusion. The good news is, we talked about that 2 billion unbanked. Only a decade ago, that 2 billion was 2.7 billion. So 700 million people worldwide have been brought into the financial system, which is pretty remarkable. And that growth curve is growing exponentially. And as you see from the graphic, some of the highest gains have been in emerging and developing markets. East Asia, for example, East Asia, South Asia, Latin America, and the Caribbean. And within that, if you're looking at certain countries, massive gains when it comes to countries such as Mexico, Tanzania, China, and India. So clearly, those BRIC countries such as China and India, there are very significant progress being made when it comes to financial inclusion. So I think what we can see is there is a certain direction of travel here, and that technology is playing a key part in that. If we look at mobile money as a good example, the growth, most areas have seen growth in financial inclusion in terms of physical accounts, but sub-Saharan Africa is actually, the growth has been almost entirely through digital mobile accounts. So globally, less than 2% of the world's population have access to a mobile money account. But if you look at sub-Saharan Africa, that's at 12%. So the country and the continent is clearly playing this leapfrogging role, where it's leapfrogging over physical conventional bank accounts, going straight to digital accounts via mobile phones. So I think there's no question about it that digital financial services and mobile has the potential for this exponential growth in financial inclusion. More broadly, why does fintech matter for financial inclusion? Where is the nexus between fintech and financial inclusion? Well, I think clearly fintech holds out the promise of increasing the accessibility and affordability of financial services, which ultimately lowers the cost of delivery by institutions, whether they be banks or non-banking institutions. And ultimately, those costs are passed on to customers, therefore increasing access. We talked about mobile money holding significant promise and the potential for scale there. We look at the number of mobile accounts, over 7 billion mobile connections globally, and 80% of those are in the developing world. And certain countries that are taking leadership positions on this, for example, the well understood and studied model of Kenya, in effect, a person's phone in Kenya is essentially their bank account. And it's ironic that in sub-Saharan Africa, particularly, there are more people with a mobile phone that have access to clean water or on-grid electricity. So that speaks volumes. What are the key fintech developments that are driving opportunities for financial inclusion? I think one is around disaggregation of the value chain. There are new players entering the market, peer-to-peer platforms, crowdfunding, digital remittance providers, neobanks, digital microfinance institutions. So the value chain has been increasingly disrupted by new players that have the ability and see the market opportunity to target low-income populations. The next development we're seeing is around APIs and the opening up of applications that can layer on to existing services. A good example in Kenya would be Safaricom, where you have the well-known M-Pesa platform, but there are now tens, dozens of apps in addition to that are layered on to the Safaricom platform that are offering everything from insurance to savings to financial literacy to accounting for small businesses. So suddenly one service becomes a multi-pronged solution through an API-based model. I think the other key development is the use of alternative information. This becomes extremely critical for a number of reasons. One is basic digital identity. So look at the efforts that India has made in its universal ID program. Suddenly, everybody has a digital ID and is therefore bankable as a result of that because they are part of a national system. ID is also playing an extremely important role when it comes to vulnerable and displaced populations. A lot of really interesting work that I think we'll talk about on the panel with refugees and migrants, where because of the nature of their situation, they don't have a utility bill, they don't have an address, they don't have a credit history. But by building an economic identity linked to the activities that they are undergoing, for example, receiving a cash transfer from an aid agency, that is now starting to be recorded to form proxy digital identities that then can be used to help displaced and vulnerable populations access financial services for the first time. And of course, alternative information can also be used when it comes to building alternative credit histories. So looking at mobile phone top-up activity, looking at social media profiles, all of this material through big data can now be used to form alternative credit algorithms that can be used when determining somebody's credit worthiness. And then customization. I think, again, data collection, the use of big data and analytics is really now being used to help financial services providers develop more accurate customer segmentation and design products that are fit for purpose when it comes to low-income and vulnerable populations. So it's no longer one-size-fits-all, and products are available that really meet the needs of, for example, a worker in the informal economy, a smallholder farmer, a fisherman, for example. What are the challenges we see in terms of adoption and scale of fintech for financial inclusion? I did talk just on the previous slide about customization, but that, as well as an opportunity, is also a potential threat to adoption. evidence shows that approximately 30% of bank accounts globally are underused or dormant. So clearly they are not serving a purpose. You think that the mobile space might be better, but evidence again shows that almost 70% of mobile money accounts are inactive on a 90-day basis. So the product might be there, but clearly it's not delivering to the needs of the consumer. And that is a problem for adoption and scale. I think a key point here, which can be debated for days and months, and actually was a very hot topic at the Global Impact Investors Network last November in Amsterdam, was there's a fine line and a gray area between financial inclusion and basically selling debt. If a low-income family does have a smartphone and you're able to mine big data to basically demonstrate that they could afford a loan, and then you push a loan through them to them via a mobile phone, what work have you done to determine whether they really need that product, whether they have the financial literacy and the knowledge about what taking that product means in terms of the interest rate, in terms of getting into debt? And ultimately, there is a risk that by having exponential growth in access to populations, but without the ethics and without the consumer protection in place, that you could end up with vulnerable and low-income populations actually becoming trapped in situations of debt and financial burden that they wouldn't have had in the first place. So we need to very much focus on the additionality of financial services, and that those financial services are changing lives in a positive way. And I think we always have to keep aware of this. Other barriers, I think regulators rightly concerned about issues around hacking and identity and data theft. As the conference has talked about today, there are strong concerns or uncertainty over blockchain and cryptocurrency. And regulatory environments, and I think this is a really important point for the region, are they designed in a way that are enabling and allow new products and services to come to the market in a way that can scale? And I think these are key barriers at the moment globally, but I think particularly in the region that are preventing the growth and scale of this fintech for financial inclusion space. So I wanted to move on to some practical examples of fintech products. The first one I've touched on clearly is M-Pesa, a great example of growth. M-Pesa is pretty much the most famous product, I think, globally today, has 30 million users, including 2/3 of Kenya's adult population. The estimate is 25% of GDP of Kenya runs through the M-Pesa platform, which is just an incredible phenomenon. And it's used for every conceivable daily purchase requirement, payment requirement, utility bills, and for credit purposes. Insurance was touched on earlier. Bima Mobile is a really fantastic global microinsurance provider that provides microinsurance via mobile phone. They have basically accelerated to more than 30 million users in only 7 years of operation. 95% of their clients live on less than $10 a day, and over 50% under $2.50 a day. Mobile penetration and the delivery of insurance for less than £1 a month is key to the acceleration of that service and how it's reached so many users. Another example in Bangladesh is bKash, which builds off the original BRAC microfinance model, which then became BRAC Bank, and then was digitized through bKash. And that has 17 million users in a country where still 80% of the population is unbanked. Moving into the MENA region, I touched on earlier, it has the highest levels of financial inclusion of any region globally. So 86% of adults do not have a bank account in this region. That's largely driven by high levels of poverty outside the GCC, large displaced populations, large rural populations, and as I think I mentioned, slow regulatory regimes in many countries, particularly around the adoption of mobile mobile money technology, whereas other parts of the region, if you look at sub-Saharan Africa, as mentioned, the adoption of mobile money technologies has allowed that region to move extremely fast in terms of financial inclusion. The Arab region is still a laggard in many countries when it comes to mobile money applications. SME lending stands at about half the global average, so that is also a challenge when it comes to SMEs looking for access to capital. Partly it's on the side of the SMEs when it comes to their ability to demonstrate quality financials and the type of collateral and credit history that financial institutions provide, but it's certainly equally a challenge when it comes to financial institutions. The banks claim they're doing SME lending, but almost inevitably don't. And there is failure in the system when it comes to a significant availability of other non-banking financial providers that typically step in, alternative providers like peer-to-peer financing, crowdfunding. They are nascent. There are some great examples, but still much lower than other parts of the region. I think moving on to some of the challenges, I mentioned the regulatory landscape remains relatively weak in the region. I think Bahrain is a very good example of where effort is being made to build a very strong regulatory regime, but many other countries in the Middle East and North Africa do not have a strong regulatory approach. I think the ecosystem, when it comes to startups that are engaged in the fintech for financial inclusion space, is nascent, which reflects a broader ecosystem of the fintech space. I think, again, from a slow start, things are moving extremely fast. I think now over 250 million has been invested into MEA Fintech startups, and there is a growth curve. But again, it's starting from a fairly low level. And I think also, particularly in the space that we are engaged in, there is low levels of understanding around the concept of social impact investing in terms of investors who would like to invest in businesses that do more than just generate financial returns, that are also focused on clear social outcomes as well. And I think the impact investing space is growing very fast globally. If you look at the data from the Global Impact Investment Network, the AUM of funds, impact funds, are growing around 30% year on year. We find in the Middle East and North Africa region that growth, knowledge, and understanding of impact investing is much lower. And equally, on the social enterprise side, the social enterprise space where businesses are being set up not only to be commercially viable, but also to address clear societal challenges, is also a young and nascent space. We're seeing a few interesting developments coming right now. So just in the last few weeks, the Islamic Development Bank has announced a $500 million fund, the Purpose Fund, which will be focusing on investing in social enterprises, particularly with a strong technology-based focus. There is a Silicon Valley fund coming to the market, Finis Labs and Elixir Capital, which will be looking at fintech for financial inclusion and other key social areas in Muslim-majority countries. And Dubai just launched its Good Force Labs as another initiative, which is an incubator for social entrepreneurs focused on the Islamic economy. So it's coming, but more effort it is needed. Again, I just wanted to touch on some very practical examples in the region. Liwa, I believe we actually have an investor in the room, which is fantastic. Liwa is a Jordanian peer-to-peer lending platform, enabling investors to invest into SMEs in Jordan, which, again, due to the banking system, are largely underserved by the formal banks. That platform, to date, has provided $8 million in financing to SMEs and is growing extremely fast. Now Money is a mobile banking application targeting the low-income migrant workers in the GCC. They estimate that in the UAE, 80% of the population is earning less than $1,400. Bank accounts are out of the question for those populations. That's around 6 million people. So Now Money is basically working with employers to create bank accounts for low-income workers in the GCC and wrapping it up with a remittance product as well. In a very similar vein, Democrants is a startup in the GCC focused on providing microinsurance to migrant workers, very similar to the BIMA model, but again, targeting migrant workers. Global MESA is a startup, again, operating both in the Malaysia to Indonesia corridor and also the Dubai, UAE to Nepal corridor, which is creating a savings account that would generate a yield for migrant workers. So they could put a percentage of their monthly salary into a savings account, which would generate a modest return. In aggregate, if you've got thousands of workers who are putting money into this application, that balance is then aggregated up and used as lines of financing for microfinance institutions and community banks in their own countries. Gromada is an integrated crowdfunding. Social enterprises that are growing, that are involved in the ethical fashion space can raise money through the crowdfunding platform, and once they produce product, they can sell it through an Etsy style marketplace. And then Mumkin is a early stage crowdfunding platform which is focusing on Sharia compliant agri SME financing in sub-Saharan Africa. Finally, I just wanted to touch on Bahrain. You've heard throughout the day the work that Bahrain is doing in terms of building a fintech center of excellence through the sandbox and the support of the government. I think what I'd like to just touch on is actually Bahrain has a long history of working in the financial inclusion space. Family Bank, for example, was established as the first Islamic microfinance bank in the Middle East with the primary objective of contributing to poverty alleviation. IBDA Microfinance Bank, launched in 2009, is spreading best practice in terms of microfinance across the Middle East. So in a way, there's a focus on the fintech, and then there's a historic focus on the financial inclusion. And I think the opportunity actually is to marry those two concepts here in Bahrain and to say, how can we actually bring expertise in fintech with expertise in financial inclusion to create a holistic offering that can be offered to the MENA region and beyond. And I'm really excited, I think, on the panel that, Tala, you're going to be talking about the wage protection scheme, because for me, that marries these two concepts of fintech and financial inclusion here in Bahrain. So that'll be great to discuss further. Thank you very much indeed. It's a pleasure to be here.